Now, this is really where we get to the meat of it and why I'm so pleased that Rian is here with us, and that's to speak specifically to how we select and designate our sponsors and our deals. So Rian, do you want to take it away here? We have just the high level kind of three-part process, and then we'll go into the many considerations, that mind map that you created for our due diligence process for our sponsors.
Definitely, Gabby, thank you. So just to start off with, this is almost like how we identify sponsors. So the key point here is that we look at the current portfolio composition, and by that I mean the spread between growth assets or growth deals, income deals, whether it's based in the US, whether it's based in the UK, whether it's based in the EU. We also recently introduced, and we're working on it, is something called an investment thesis. And what we do there is we've identified the different sub-sectors within real estate as an asset class, and we said what are the drivers of returns. So then, based on those drivers of returns, we go around the world and we identify, based on those drivers of returns, where do we find supporting factors or fundamentals. And based on that, we now know that we need to go and look for multifamily in Utah, or we need to look for office in this area, and so on and so forth. So it points our search for sponsors very specifically in the areas where we believe they're supporting fundamentals for returns. Okay. From there onwards, if we've identified a sponsor, we have what we call vital signs. And the vital signs, it's about 8 critical aspects that a sponsor needs to satisfy before we even go into a scoping report. So in other words, think of it as a hurdle as a sponsor needs to jump over to even come into our system. It's our minimum criteria. Then we do what we call a scoping report. And the scoping report is just a basic analysis of that sponsor, where I, as Chief Investment Officer, then decide, do we continue with a due diligence with this sponsor? So then what we will do is we will then have an introductory meeting with the sponsor. We will have an outreach, and we will determine whether there's a fit or not, and whether we can do a deal way. From there onwards, we've got documentation that we send out where we get information. We call it our listed application forms. And then we go into a due diligence report. If need be, we have a follow-up conversation with the sponsor in terms of the sponsor itself. And then it goes to our investment committee for a decision in terms of the sponsor. So maybe just going a bit deeper into this DD or due diligence process of the sponsor. So if I can start right top where it says, is it an established entity? What is very important to us is that sponsors must have good corporate governance. What we mean by that, are they registered? Are there annual filings in terms of their company registration in place? Do they have a good standing with the tax authorities? Because it's very simple. A sponsor is responsible to manage an SPV within which we invest. So if that sponsor doesn't have good corporate governance in terms of their own business, there's a big risk that it's going to be the same in the SPV they're managing on behalf of our investors. Then the second thing that we also do is we look at financial discipline and soundness. So we need to have sight of financials. And we need to know, once again, did they submit financials? If not, do we have management accounts and is it up to date? And it's once again about financial discipline. So if they don't have up-to-date management account in their business, we're going to struggle to get information on quarterly distributions from that sponsor. It's as simple as that. And why the financial soundness is so important. And there we look at things like, are they solvent? Are they liquid? And so on. Because we want to reduce the risk of misappropriation of funds. If a sponsor has a cash flow issue, or a liquidity issue in their business, there could be a risk that they could dip into the SPV funds just to breach them a bit and things can go wrong. So that's quite important. And then also we look quite a bit at growth dynamics. What we mean by that is, how did their assets under management change? How did their revenue streams change, and so on? Because let's say they had a very strong upward trajectory and suddenly there's a dip. We need to understand what happened. There's an event in their business. So then if we look at the niche, we want to deal with specialists. We don't want to deal with generalists. So from that point of view, it is quite important for us to understand what is this niche. Now, a niche could be a specific asset class, or it could be a specific region, that a sponsor only does property in that specific area. And what we need to know is, what is the experience, first of all, of the company, and then of the team within that niche. And ideally, we want to look at a minimum of 10 years kind of experience as a minimum within a specific niche. Then we need to understand, how do they execute on their niche? In other words, they're a specialist in an area. What do they do so that we can unlock value for our investors? And more important is, do they outsource stuff or certain functions? And if they do, what is the responsibility of that outsource partner, and how do they control, or how do they manage, or how do they govern that outsource partner? Then if we go to the top left where it says team, we do quite a bit of work, first of all, on the background and credit checks of the team, founding partners, directors. But we need to understand how big is a team, and also what level of independence is there within that team. Ideally, for example, we want independence between the acquisition team and the investment committee. We want to make sure that the sponsor do not fall in love with a deal and there's no checks and balances along the way to caution, if I can put it like that, right? We also look at how are decisions made. So who makes those decisions? Does someone have a special vote, a proxy vote, or a special vote where they can override the decision by an investment committee? Now, a further thing that's quite important in terms of that team is that we need to understand what's the relevant qualifications of the team members. Very important, relative for that specific asset class, relevant for that specific asset class, and what's the relevant experience for that niche or that asset class. And we also have a look at the depth or the reach of that team. If they say to us they do turnkey, we want to see, if I look at that team team can cover all these areas of this turnkey solution. Otherwise, we've got either concentration risk or we've got execution risk. Then in terms of track record, it is quite important for us to understand historically, what did a sponsor do in terms of their deals, in terms of IRR and cash on cash. But more importantly, we go back and we say, on these deals, what did you forecast? And what did you actually achieve? The last thing is, we don't want to overpromise to investors and underdeliver. We need to have a high degree of certainty when we publish returns on our platform, that those returns will be realized. Also, we go into the closet, if I can put it like that, to determine, did any deals go wrong? Why did it go wrong? And what did you do in terms of your process to prevent a similar occurrence happening? And then in many cases, you get outliers. So you will see, let's say, an average IRR of 17, cash on cash of 7, and suddenly you see a deal that sits with an IRR of 4.5. We need to understand why that was an outlier event. So we just don't take returns on face value. We stress test the returns and we understand the returns. I think that is quite important. And then lastly, in terms of capacity, as I've mentioned at start, it's very important to us to deal with sponsors that's got a proven capacity. Because we don't want to do all this work and then we get one deal a year out of this sponsor. Because our community start to trust the sponsor, they start to trust the quality, they start to understand the deals. And then just lastly, in terms of the synopsis to the investment committee. So apart from preparing a complete due diligence document that can range anything from 18 to 30 pages, we also provide a synopsis. Think of it as a SWOT analysis, where we look at things like what's the positives of this sponsor, what's the negatives, what's the risks, and so on. And why the risks are important, Gabby, is that it gives us certain things that we need to consider if we enter into a deal, so that we can specifically manage that to mitigate those risks. So a mouthful, but hopefully we illustrated that it's quite an onerous and an in-depth process.
But one that's so critical, and I think speaks to the caliber of sponsors that we are privileged to call partners and have offerings with on our marketplace today. And what I love about the due diligence process that your team does, Rian, is that we do try to make as much of that as we can available to our investors in the sponsor descriptions on the deal offerings themselves. We offer recordings of sponsor interviews so that as an investor, you can watch a recording with Rian and the sponsor, or our head of community, Lee, interviewing that sponsor to learn more about their background and actually hear from the sponsor directly on their experience and their track record and success.
Gabby, and can I just, it is not that we don't want to be transparent in publishing a full DD doc.
Right.
The success of our due diligence lies on confidentiality agreements that we have with sponsors. So if we disclose certain information which they believe are confidential, we're going to struggle to do full due diligences. And that's why we started doing, for example, on a sponsor, what we call a brag sheet, where we really provide the nuts and bolts of that sponsor to our community.
Yes.
But so it's just important for the participants to understand it's not a lack of transparency. It's rather to protect confidentiality, that we can get access to information to do a proper job.
Yeah, absolutely. And I think also recognizing that many of the sponsors we work with are still private companies, they're not publicly listed. So when they are providing these details, they're actually providing their financial statements, their income records and everything. So it's incredibly sensitive information that we want to be mindful we are keeping confidential and not sharing with others. Something else I just want to highlight here is that we actually select and designate our sponsors on our marketplace, specifically titling them as either tenured, established, developed, or emerging. And what we'll see just now is that of the 3 current offerings that we have on our marketplace, 2 offerings are with 2 tenured sponsors and 1 with an established sponsor. And these are quite significant metrics to be held to. As you can see, an established sponsor has a management team with over 40 years of experience, an operating age of 7 to 15 years, and assets under management of more than $500,000. A tenured sponsor, assets under management of more than $1 billion, with a management team of more than 50 years combined experience and operating for more than 15 years. So pretty heavy hitting in that regard. And if we just look here at who our sponsors are, some of our sponsors, you can see them listed here. What I'd love to get into is how we actually select and designate our deals. So the deals that our sponsors are currently offering to us. And Rian, if you can just touch on this briefly.
Yes, I will definitely do so. So once we approve the sponsor, there's a continuous outreach to the sponsors to determine whether there's new deals. Then once there is a deal, we get certain collateral from the sponsor, and we typically are invited to an initial webinar where they introduce the deal. From there, the supply team go and we do an internal due diligence report on the deal. And what is very important there is that we actually test the reasonability of the figures of a deal. So it's, once again, we're not just taking it on face value, but we are testing if it's reasonable, because that results in faith in returns. Secondly, is we also do internal research about the market dynamics where that property is. And a good example would be if you look at the Utah deal, Salt Lake City, which we will be putting live soon. I think it's maybe live already, is where we looked at how Utah and Salt Lake City supports multifamily as an investment. So we do our own research. From there onwards, there's an assessment of the due diligence report, and then we have an interview with the sponsor where we question them about their deal based on our initial due diligence. From there, we prepare a final due diligence report, which goes to the investment committee. And as part of that due diligence report, there's also a synopsis in terms of that deal. Once again, what's the fundamentals that will drive returns? What's the positives? What's the negatives? What's the risks? And what's the rationale for this investment? And then there's a recommendation. So once, it's not just dumping a lot of data, it's actually analyzing it and getting to, once again, to a SWOT analysis, to a conclusion. From there, it goes to the investment committee for their approval and consideration. And this is what you've spoken to earlier, Gabby. Then we engage with the sponsor to determine what is their timelines for capital raise, and also if we can secure capacity for our community. Because it's quite important to us that we secure capacity. We don't want to go through this process, investors show interest, and then we don't have capacity. And that's something that we manage and monitor regularly with our sponsors. And then, as you've mentioned, there's also then a deal-specific webinar with the sponsor, which is made available to our community, to investors. But the work doesn't stop there. From there onwards, we then do what we call deal tracking and deal monitoring. So my team go and we identify when do we need to earn certain distributions. There's a forecast of what we should receive, and that's then measured against what we have received. And the two things of importance there. One, we cannot wait too long for funds from sponsors. And the second point is that if there's deviations, it's a flag that we need to engage with a sponsor. So we do quite detailed deal monitoring, and from there onwards, there's deal reporting. As the participants and investors know, there is reporting at deal level. So if a deal does a quarterly report or distribution, then that report is sent to or shared with our investors. But there's also a report coming to the investment committee where we can look at deviations and decide what we need to do in terms of something that's worrying to us. And then lastly, we engage with the sponsor when it's time to exit the deal, so that we align with the execution strategy in terms of exiting that deal.
Absolutely. And I just want to highlight here your incredible team that sits behind you, Rion, that helps to make this a reality for our investors. You have your investment committee and then our deal operations team that is doing all of this work to find sponsors, to engage with sponsors and vet the deals, to complete those due diligence reports, and to make final decisions on vetting a new sponsor or a new deal.
Yeah, and also we've recently hired an intern, Dean, which is not yet added since he's an intern, but he's already adding quite a lot of value in terms of the team.
Yeah.
The other thing, Gabby, that I think is important is that a report that we shared live at the events was our performance report for 2020, which is right through COVID. And I highly recommend that people take a look at that if they want to see track record and performance, which again, the team's looking at. If you run any good business, you've got budgets to actuals. So it's actually very useful.
Absolutely. And I have a question here from Rachel asking where deal reports are posted. So all deal offerings, all information on them is available on that deal page that I showed you on our marketplace. And then we do release to the investors in those deals quarterly updates on performance of the asset. And then Rion's team is working on producing quarterly reports for all of our community to understand performance across all of our deals.